Hello and welcome to another update video about the DXY. We see promising signals. The DXY seems to be coming down and it is following through currently on the analysis and the outlined scenarios. The idea was that the DXY ideally in our preferred scenario would form a top in the red resistance range and then follow through to the downside into the low 90 US dollar region. I just have to shift these wave labels to the right, but at the moment it's looking promising. So we are going to talk about what I need to see as further confirmation that indeed this outlined wave structure and scenario is unfolding, and what can serve as confirmation that indeed we are moving in the third wave of the C wave to the downside. The idea is still that an A wave of a larger fourth wave, or alternatively A wave, that's not so relevant right now, but that an A wave bottomed here in February 2023, that was around $100.90. We then saw a so-called expanded flat structure, a corrective rally, into the October 2023 highs that pretty much coincided with an S&P 500 low. And yeah, then we basically saw this breakdown. I shouldn't really say breakdown, it was just still in a range overall, but still this downturn in what I believe is a 5-wave pattern. And if you know about Elliott wave, then you know that we're always looking for 5-wave patterns to determine the trend direction. Now, granted, it's not the cleanest 5-wave pattern to the downside, but it is one in my opinion. At least we can interpret it as one. And it's a 5-wave move down, which could indicate that this is the wave 1 of the larger C wave here. And then we were looking for a corrective bounce. You might remember that from this region that pretty much materialized very nicely. And this was a wave 2 corrective bounce, a corrective rally into the previously specified resistance area defined between $103.17 and $105.88. So such a wave 2 correction usually moves into the area between the 38.2 and the 78.6 retracement. The golden ratio level there, the 61.8, is an ideal level. Shouldn't really move much higher. I mean, could easily still sorry, did I say B wave? No, this is wave 2. Such a wave 2 typically reacts to these Fibonacci levels. The next move up could take us to 105.88, but at the moment it looks as if the DXY could indeed have topped in our resistance area after the trend line broke. So, okay, what do we now need to see as further confirmation? So, first of all, we've now taken out, and that's new compared to the previous video, we've now taken out this swing low area here around $102.90. That was already an early indication that we might have topped, which is a reason why I make this video today. Further confirmation with a break below that last swing low before that around $102 here, pretty much this swing low from the 5th of January. And then confirmation is a break below the wave 1 low at basically $100.61. So far it's good, it's looking good. I will continue to focus on the downside now because we've taken out the initial swing low, as long as the price stays below $104.30. It should really, in this structure now, not move above that level anymore. Yeah, shouldn't. So that's the main thesis now. Still early in the process of a downturn, so could easily go the other way. Let's also talk about what the relevant Fibonacci support levels are now that need to break for further confirmation that we're heading to the downside. It could still easily find support at either $102.26. That's pretty much in line with those previous swing lows, and $101.54. That's the 78.6 retracement. So a sustained break below 101.54 will also be additional confirmation that we have topped there. And overall, I would like to see this move down, head into the low $90 region. Okay, so what would be a bullish alternative? Well, it could be if we react to, for example, the orange support zone, it is easily possible that this wave 2 stretches out into a more extended ABC structure. That's easily possible, especially because we only have 3 waves down at the moment. That would be my bullish, short-term bullish alternative at the moment, in case we suddenly turn to the upside from here, break above that previous swing high that I mentioned, and then also take out the 15th of February high. We could then test $105.87. But at the moment, as long as the last swing high stays intact, here at $104.30, I think the downside pressure is strong, and I'm going to watch the relevant parameters that I mentioned for further confirmation that we've topped. That will remain my preferred scenario, that we've topped, but we'll have to change my view with a break above that last swing high. So it's looking more and more promising that the DXY could have topped, and that in the next few weeks and months we are breaking below the $100 level. That's my update about the DXY. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then please check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.